can't save your way to financial freedom. You can't savings account your way to fire. So we have to invest. And you said that step one, we should do our best to max out the tax advantage types of investments. So that would be your 401ks, traditional at work, or 403b or TSP, depending on the type of organization that you work for. And then we should move towards taxable accounts. So when you say taxable, you're talking about the just straight brokerage accounts at your Vanguards or Fidelities, or and so we should have a chunk in both arenas. Is that what you're telling us?
So that's exactly what I'm saying. Take advantage of your tax advantaged accounts, because taxes are your biggest drag, right? It pulls you down on your path to financial independence. So the more money you can allocate towards your tax advantage accounts, like your 401k, it's tax free going in. You got to pay going out. Your Roth IRA, you pay taxes up front, but hopefully you're on at a lower marginal income tax rate, and then it compounds over time. Take full advantage, because it really will help compound over time. And the other thing is, it depends on when you want to give up on work, when you're going to be sick of doing your day job, right? So if you have found the perfect day job that you can work until 60, you can feel free to just max out your tax advantage accounts. And when you're 65, 66, you can get Social Security, draw from your tax advantage accounts, you're good to go. But if you are in this crazy job you don't like, you want to do something else, then you got to raise up your saving rate, max out your tax advantage accounts, and save and invest as much as possible in your taxable accounts. So I talk about in my book to have a goal, a ratio of a taxable portfolio. It's not just your brokerage accounts too. It's your rental properties, your private investments, your crypto, even whatever it is, to have a ratio of about 3-1. So in other words, your taxable accounts are 3 times greater than your tax advantage accounts. And so a lot of people think just to go to the tax advantage accounts, and then they don't think about the taxable. But it's the taxable investments that are going to provide you that passive income to survive if you want to leave well before 59 and a half.
Right. Okay. So that's the demarcation line, because the tax advantage accounts are earmarked for retirement. So if you touch them before 59 and a half, then you're looking at a penalty. And if you conversely put the 3-1 ratio, so you got 3 times as much in your taxable types of investments, you pay taxes, but you can grab it, you can live off of it.
You can utilize it. Yeah. And so that's the thing. You've got to figure out, you got to forecast your misery and figure out when it is you're no longer going to enjoy your job. Or maybe it's your health. Your health might not last for 20 years after high school or college. You know yourself the best. And so you've got to figure out that balance. Now, 3 times is kind of the ultimate goal. So, don't feel, like, oh, you got to get there immediately. It's just a journey. It's your goal. But once you start getting to like a 1-to-1 ratio, you can kind of recognize, okay, you have more choices. And what I also discovered is that once you get to about a $250,000 to $300,000 in investments, that's also when you start realizing, oh, there's that freedom. I could walk away if I want to. You get that taste. And the reason why at 250,000 to 300,000 is important is because if you take the historical return of 10% for the S&P 500 and multiply it by 25,000 to multiply by 250,000 to 300,000, you get 25,000 to 30,000, right? And I think most people can live off $25,000 to $30,000 a year as an individual. Obviously, it's harder in some cities than others, but that is when you start realizing, oh, your investment returns could return more or enough so that you don't have to work. That's where it gives you that idea and that momentum.
Now, as you were on this journey and you were putting your bricks in place, for you, what categories did you enter into when it came to investing? Was it just the stock market, or did you also do some entrepreneurship stuff? Did you also do some real estate stuff? Like how did your progression look?
So I worked in equities and investment banking. So my compensation, my promotion was all tied to the stock market. And so what I did was every other paycheck and 90 plus percent of my year end bonus, I would diversify into anything but equities. So I invested a lot of it in real estate. So right now, about 50% of my passive income and my net worth is in real estate. And I think for the average person, real estate is something that should be a great focus. And why is that? Because we all need somewhere to live. It's understandable, right? You know what you're going to get. It produces shelter, it produces rental income, and it's not going to disappear by 50% of its value overnight like a stock. So, what I recommend many people focus on is getting neutral real estate. Neutral real estate means just buying your primary residence. So, you go up and down with the market. You got to live somewhere. You're not really profiting from real estate, but you're not negative real estate by renting. Sooner or later, you need to figure out where you want to live, what job you want to take, and hopefully that's by the age of about 30, 35. And so the idea is if you get neutral real estate, hopefully you'll benefit due to inflation and the long-term returns of real estate, which are like 3 to 4% over 3 to 4% a year, excluding leverage. You live in it, you enjoy it. 3 to 5 to 10 years later, you rent it out, and then you buy another place. You live in it for 3 to 10 years, you rent it out again. So by the time you're 40, 50, 60, you have a nice real estate portfolio that can help pay for your living expenses. Now, obviously, along the way, you can invest in stocks. So about 30% of my net worth is in stocks. 20% of the 30%, 20 or 30 is in dividend paying stocks. And the other 10%, so 10% of my net worth is in growth stocks, which have gotten crushed in 2022. But I've held those growth stocks for over a decade. They've done well, and and then the rest of my net worth is in private investments, private real estate funds, private equity, venture debt, and then something I encourage everybody to do based on what they believe in is create something of their own. So when we all start working, we're leveraging off the reputation and organization of our firms, right? Did I do a good job because I'm a good worker or because Goldman Sachs has been around for a while and has a good reputation? I think the answer for most people is the firm is what carries you forward. But if you have an entrepreneurial nature, as you do, and perhaps many other people do, and maybe all of us do, because when we were kids, think about all the creative things we used to do, right? Art, science, paper mache, whatever. So if you are creative and you want to bet on yourself after you've gained enough knowledge, you can go and build your own business, and that can be a great source of income and wealth as well.
So now that you successfully went on a journey, got yourself free, you were able to jump, and you've been able to be work optional, as they say. Are you still actively putting money into the various forms of investing? Are you still putting money into the stock market? Are you still looking for rental properties? And are you still investing in on and on and on?
Absolutely. So what I've done is I just don't believe good things last forever. It's just kind of the way things are. Great things are great one day. It's just like raising children. You've got a great day one day, and then the other day they're like terrors, and you're like, oh, what happened to the yesterday? And so I know that I'm really lucky to start Financial Samurai, and it generates a livable income stream. So my idea has been to take that, what I think is called funny money. It's just bonus money, right? Because I would write anyway for free. It doesn't really matter. Um, and I take that and reinvest that capital, that income, into passive income generating investments, which I think will last far longer than my own energy and my own solopreneur business. So I invested in a 50% to real estate, 30% to dividend paying stocks and stocks, and then like 15% to private investments. And I've been doing this for a long time. And the idea is, look, publishing 3 times a week on Financial Samurai for 13 years is fun, but it's tiring, and I don't know how long it's going to last. So for me, I just want to shift a higher and higher percentage to truly passive income, because eventually the good times will end.